is an essential component of the modern world, from batteries powering electric vehicles to industrial applications that drive economies. And with global demand on the rise, the need for high-quality, low-cost supply has never been greater. Now, one company making waves in this sector is Sovereign Metals with their Kasiya project in Malawi, probably the world's largest flake graphite deposit. Well, today we sit down with Sovereign Metals CEO Frank Eagar and CCO Sapan Ghai to discuss the company's graphite strategy and what makes Kasiya a potential game changer. So let's just start off. Give us the snapshot, if you like, of the project overall.
Very good. Thank you. Thank you very much for having us. From me and Sapan, our Chief Commercial Officer. I think just to dive in straight away and to highlight that Kasiya has got the largest rutile deposit, known deposit on the planet. Coincidentally, we also have the second largest graphite deposit on the planet. Importantly, though, this Kasiya remains a primary rutile project, with graphite ultimately being the byproduct, and it's the only known deposit where we actually have knowing that a graphite is a byproduct. We also have Rio Tinto as a 19.9 strategic investor, which makes this put us in a completely different ballpark compared to many and most other graphite standalone projects.
Why is it significant that graphite's a byproduct?
It's significant in the sense that if you think about your traditional hard rock graphite projects, they have to finance themselves on the back of a very complicated and opaque market where they only have graphite as their single source of revenue. Kasiya being a primary rutile project, we are able to, and we've done a huge amount of work over the last number of years through pre-feasibility study and optimized pre-feasibility study, demonstrated that on rutile alone, we are comfortable that the project can be banked. We've entered into a number of offtake agreements with blue chip companies for our rutile. We've qualified our rutile with them, with these end customers. So we are quite comfortable that Kasiya as a primary rutile project can be financed, which makes it unique in that the graphite, it's a difficult market. We are not dependent on whether the graphite sells for $500 a ton or $1,500 a ton. We have a number of options and optionality here on how we can market our graphite. And I think this presentation really demonstrates to the market why our graphite is in such a different, or so different to other graphite stories out there. And as we go through the presentation, even how it's different and can compete ultimately with the Chinese who controls over 75% of the graphite market.
Indeed. Well, let's carry on through this presentation. I know this slide is pretty key, isn't it? This is talking about the weathered nature of the ore here. So just tell us why that is so important.
I think this is very telling. Typically, what we've seen, and Kasiya is a blanket style flat mineralization. It's hosted in a soft friable saprolite, which you can see from that image there. You can almost dig it up with your hands. Not quite as soft as that, but it is very easily mineable. No drilling, no blasting, which in our case again drives some commercial elements in that. Through the lack of that intense processes, we are able to preserve flake sizes. We've also seen through comparing ourselves with some of the African and Australian projects and the Northern Hemisphere graphite stories, that going down through to depth and increases in hardness, sulfur levels increase, which is not really very helpful for an anode material going into a battery. So just having this very soft saprolite material and low sulfur drives some commercial benefits and compares ourselves favorably to some of these other transitional and fresh rock graphite projects.
Okay. So effectively, the weathering has done a lot of the heavy lifting or the hard processing work for you.
Absolutely. I mean, over there, if through just weathering, the graphite and rutile has concentrated over time, and so really it's now just a down to gravity separation processing, making it very easy for us to liberate. Well, essentially, the graphite is already liberated, and through the gravity separation process, we can extract graphite very easily. Let's look at this slide. The traditional similar processing or similar graphite projects or hard rock projects have to go through the whole process of drilling, blasting, crushing, grinding before they get to a wet concentrator plant. And Kasiya, in comparison, we only have to load and haul. We have to wet scrubber it, put it through a scrubber, and then into the process plant. And this in itself, we're fortunate in that we almost 70% of our flake sizes are medium, large, and jumbo. And through this very simple process, we are also able to preserve those flake sizes. And I think it's important to note that the flake sizes has an impact on value. Medium to large and jumbo flake sizes sell for significant premium to the smaller flakes. And the smaller flakes are typically utilized in the anode market, where medium and jumbo flake sizes are destined for the refractory materials market. And we've demonstrated, through the test work that we've done, that we can supply into all of these markets. Essentially, 94% of the graphite market we can supply our graphite into. So we're not just limited to the anode market, where many of the traditional or current graphite projects are forced into, essentially because the flake sizes that they have in their deposits. It gives Kasiya really a huge amount of flexibility in terms of our marketing strategy, and benefiting and extracting some of that additional higher value graphite markets.
Okay. And you've actually proven that the graphite you have and the flakes you've got are battery grade effectively, haven't you?
Well, we've done a huge amount of downstream test work. We've demonstrated that we can produce a coated spheronized graphite, which on almost all of the Chinese standards, or better the Chinese standards. We've done test work on refractory materials, and we've demonstrated through using German labs that our graphite is highly resistant to oxidation at high temperatures. And so, I think we've proven through the downstream test work that we can access essentially all those markets: the anode, refractories, and also expandables and expanded graphite markets, which covers 94% of the entire graphite value chain.
And you're fairly well down the path now. I mean, your next big milestone is coming at the end of this year, and that's, of course, the DFS.
So the next milestone is our DFS. We've done a huge amount of work over the last 12 months, particularly large-scale work in Malawi on our project site, which I think is an important element which many junior companies don't often do or not do enough of. We ran through a pilot process where we've moved 170,000 cubic meters. We stockpiled that. We did the test work on two mining methods, including hydro mining and dry mining. We determined that dry mining is the most suitable for this material. Again, very supportive of the process to preserve flake sizes for our graphite. And there's just an image of where we were before we started the mining, the trial mining, where we were 20 meters deep and moved that 170,000 cubes. We've processed some of the material at our spiral plant in our laboratory in Malawi. And the image on the right-hand side is where we are now. That image is about 2 weeks old now, but essentially it's almost like we were never there. We've rehabilitated the mining area. Farmers are back on their land and have planted maize and a variety of other crops that we are testing as part of our rehabilitation and closure programs. This really has benefited us is the empirical data that we collected through this pilot phase. This obviously feeds into our definitive feasibility study, which we are targeting for completion at the end of this year, fourth quarter of 2025. It's given us a running start into the study. We've got our EPCM contracted and working, so that's all on track. Just the results quickly here of what we released a couple of weeks ago and the optimized pre-feasibility study. The NPV still $2.3 billion for a 25-year period project. Importantly, this is only taking into account 30% of our mineral resource. An average annual EBITDA of over $400 million. With the important piece here, and I think in the context that we're talking about, the operating cost or the incremental cost for producing a ton of graphite, only $241 a ton.
To help put Kasiya's graphite potential into perspective, we spoke with financial analyst Charles Archer.
You've got graphite with the lowest cost base that can outcompete anybody in the world. It can go into any end-use market. And then you've got Rio Tinto sitting there. 19.9% shareholder. If they go over, they have to make a bid. And there were three key things that they wanted to be sure of before, risk areas, I would say. The first is, can the rutile be got out and processed economically? Yes, it can. That's what we learned with the pilot plant operation over the summer. The second is, can the graphite be used in all end use cases? Yes, we now know that it can, as very recently. And third, using the optimized pre-feasibility study that we just had out, how confident are we that this stacks up economically for the long run? And now they're very confident. So all those three things have been checkboxed. And then the only question is when they're going to choose to make a bid. Or alternatively, maybe they won't make a bid and Sovereign will build it themselves. But I think that's unlikely. I think they're just going to want to take this off the board.
And how do you think we can put a fair value on a company like Sovereign Metals, considering where it is today and its potential?
There's two ways to value an asset. Obviously, there's the net present value, plus a plus or minus a premium or D premium, and that's obviously what people would like. The second option is to look at the market capitalization of the company and then apply like a standard premium of around 30%, because this graphite can be produced cheaper than in China, which is unique, and because the rutile is the first major deposit since the 1970s. It's incredibly valuable. So it's for both of those reasons, a very strategic asset. So the usual rules, in my opinion, don't apply. If Rio Tinto come along and they go, right, we're going to look at your current share price, I'm going to add a 30% premium and make an offer, the share price will shoot up to that price, right? If Sovereign Metals then rejects it, Rio Tinto would then have to make an increased offer based on this new share price level. But beyond that, the other thing is Sovereign, if you look at the money and the team behind the company, they are capable of building this mine themselves. And they built the pilot plant themselves, so they can build the bigger thing if they wanted to by themselves. So if Rio Tinto didn't want to do that, then Sovereign would just build the mine. And the problem that Rio would have is that Sovereign would build a mine exactly like Rio Tinto would do it. And every stage they get closer to production, the value of the asset increases. And then the premium they would have to pay for it would rise as well. And then beyond that, Rio Tinto, as a major, would almost certainly want to do their own much larger definitive feasibility study that might take another 2 or 3 years and build the plant potentially a different or larger way. They don't want Sovereign to do half the work and have to like rejig it, you know? In the same way as if you were building a house from scratch, you know, you wouldn't want somebody else to do half the work and then you get to adapt it. You'd want to do it yourself.
Is Sovereign considered buy at the moment, buy and hold?
It's a buy. It's in my view, and I pray this won't come back to bite me. I think Sovereign Metals is the best stock on the AIM market at the moment, from a risk to reward value. That bid with a premium from Rio Tinto, I'm fully confident it will come within the next 12 months and potentially sooner. And all of the risk boxes have been checked off, and they've got the right management, they've got the right finance behind it. They've got graphite, again, lowest cost of production in the world. They've got Rutile, first deposit find since the 1970s. It's a unique, one-of-a-kind situation, and it's not going to be replaced, and Rio are going to want it. So that's as simple as that.
So if you look at the cost curve where we sit versus where the average Chinese cost is, and the other graphite projects that's trying to operate, in some cases they're not operating at the moment. In other cases they raise capital or do the feasibility studies to become suppliers. It's going to be very difficult for those projects to compete. Well, it is very difficult for them to compete in what is today's real graphite cost curve and real current demand, controlled more than 75% by China at that average cost of production. Where Kasiya at a byproduct, and we spoke about it earlier, it's not our primary product. I think really, and SAP, you will be aware of this, but some of the fund managers have termed Kasiya as being a category killer, really putting us in a very, very commanding place as a graphite or supplier of graphite.
No, I think it's safe to say, as Sovereign Metals, we're not proponents or champions of graphite as a commodity. It just so happens because we've got this huge rutile deposit, titanium deposit. It also contains, the second largest resource of flake graphite material in the world. So every time we're producing rutile, we end up with a high concentration of graphite in our plant. So we made the decision, economically, it makes sense for us to essentially polish up that graphite, concentrate it into a higher saleable product, and send that off to market. The nuance that we have here is because we are a rutile project, our cost of producing the graphite is so low that we are probably the only guys on the planet who could compete with China today in the graphite space. It's not like we've engineered Kasiya to become this graphite champion. It's almost a side effect of the fact that it's such a large scale deposit with this weathered resource that's easily mineable, easily processable.
Yeah, I basically made the same notes, Sapan. Yeah, you've got the deposit there. The fact that it's a byproduct makes it quite economical. It's economical on the rutile point of view, just on its own. There, the flake size is perfect, as you say, for batteries. The weather door makes processing easier, and you've effectively proven up you can do it through the PFS, and the DFS is going to definitively state that. So I mean, just on that, if I can ask a question on that, the DFS, how can that change perhaps the numbers or the economics from the PFS?
We've been fortunate to have Rio as a strategic investor, and we've had a lot of involvement from what they call subject matter experts within Rio, participating in the optimized pre-feasibility study, participating in the pilot phase. It's been overseen by a joint Rio Sovereign Technical Committee. So the numbers that came out of the optimized PFS, we feel are very close down the track of accuracy in terms of a DFS nature. So I'll be very surprised if the numbers are very different to what we've seen now.
Good to hear. And on sort of getting started then, how obviously all hands are at the moment on the DFS there towards the Q4 end of this year here. When would you be looking to get actually started, do you think? Would it be throughout the course of 2026? And also on the funding of that, of course, the capex there stated in the PFS at 665 million. That's the capex to first production. So in terms of thinking ahead and funding into production, what are we thinking here?
Well, there's still a bit of water that needs to flow into the ocean, I guess. We're certainly talking to a number of African-based development finance institutions who've shown a lot of interest already in the project, given that it is, an African story and will have a significant impact on Malawi and the region. So we certainly are having those discussions. In terms of timing, the next step is obviously, closing in on offtake agreements, front-end engineering and design, closing up on the financing structure. So there's a bit of time and work that needs to go into that to put a definitive time frame on when we will be in construction or operation. We have our internal objectives, or I have my objectives. So things need to fall into place. It's not unrealistic to think about a construction start somewhere in the second half of 2026. But there's still a lot of work that needs to be done to achieve that milestone.
Sure.
I think what's important just to highlight is that, again, going back to Kasiya being a primary rutile project, with graphite as a byproduct at that incremental cost, which puts us to the bottom of the cost curve. We don't have to go downstream like other graphite projects to capture some market share and margin. We are ultimately just a mining company and will remain that. We don't have to become a chemistry company like some of the others. So which puts Kasiya again in a very unique position to compete with low cost Chinese production. Not that I think the graphite has become a geopolitical tool that's been used in the trade wars between the East and the West. And many of the anode producers and other graphite end users are stuck between China and the US. And I think there's a big opportunity for Kasiya to deliver or supply into those end users that are essentially beholden to Chinese export restrictions and whims of, I guess, the senior leaderships of those different countries. So maybe just to finally conclude, Kasiya, we remain a primary rutile project. We have Rio Tinto as one of the only graphite stories, and which is not a graphite story because it's a rutile story. As a strategic investor, we're going to become, or have the potential to become, probably the largest graphite producer globally. And we have a huge amount of flexibility in the markets which we are going to supply into. So it's not like we're trying to take over the supply into the anode market. We have a number of options that we can deliver into. We will produce a high quality product between 96 and 98% carbon with very low sulfur levels. And which makes this so interesting is that we have a large percentage of large flake size flakes, which we can preserve through the mining and processing process. And we are progressing our milestones with the DFS due in Q4 2025, hopefully, and then progressing beyond that. Let's see.
Well, thank you, Frank. I mean, a very good rundown of the graphite element. I mean, I do just want to ask one final question. You said actually there, a graphite project that's not a graphite project. We've talked about the byproduct that the graphite is here, but of course the key commodity is rutile. So, I mean, how come you're really pushing the graphite angle here? Have you forgotten about the rutile, or does the market not get it? What's the deal on the rutile side as well?
Oh, look, that's not the case at all, Mark. I think if you go back and look at our RNSs from 2021 onwards, you'll realize a lot of the work that we've done on the graphite in the last 12 months, we had already done that on the rutile. The first thing we did when we found just how much rutile we have here at Kasiya was to go away, check the chemistry of it, make sure that it's a saleable product, make sure there's no chemical impurities, make sure that all three end-use markets can use our rutile, whether it's the pigments market, the welding market, or the titanium metals market, that worldwide, anyone within the titanium space can actually use our rutile. And part of that process was, shipping anything from fresh ore all the way through to our actual rutile product to these third parties. And look, without tripping over any NDAs, suffice to say that all the major players within the titanium space all know about Kasiya, are all fully aware of Kasiya's potential as a high-grade titanium feedstock producer for decades to come. And it's also part and parcel of why we've ended up with Rio Tinto as a 19.9% shareholder, them being, the largest producers of titanium dioxide outside of China.
Okay. So so rutile is still very much the main story here, but the graphite just gives you, doesn't just give you, it gives you a huge bonus.
Absolutely. I mean, I think that's I think where we are. And don't forget about the strategic nature of titanium. You've heard that, you're hearing a lot about that in the news cycles at the moment. So, by all means, this remains a primary rutile project, and the graphite really is the I'm going to say it, the cherry on the cake for us.
Okay. Well, thank you very much for your time, both of you, Frank Eagar, the CEO, and Sapan Ghai, the CCO of Sovereign Metals. If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.